let's just start at the very beginning of what the Genius Act actually is and what it does. So basically, the Genius Act is the first step towards a serious crypto regulation. And by crypto, obviously this is primarily focused on stablecoin. And since stablecoins are broadly a part of crypto, so this is basically also the first comprehensive US federal framework for crypto regulations and as well as stablecoin regulations. So why? The first question should be like, why do we need government approval on something?
Right.
Yeah, so that's the most basic and fundamental.
I have an assumption that it might be because people don't trust crypto that much. People don't know about it much, so they
Yeah,
get
yeah.
that government stamp of approval.
Yeah, exactly. That's one part of the question, right? So that if the government that brings you the more conservative side of the market that basically doesn't want to do anything that doesn't have a stamp of approval from the government or from the right financial authorities, right? So that's one part of the one side of the coin. The other side of the coin is also actually kind of similar, is because even if you are interested in crypto, even if you are interested in using stable coins, you see the point of it. You are afraid to invest billions of dollars as a major
Right.
because like what if the government cracks down on it tomorrow? Like this is actually something that legitimately happened in the last few years. So there was this thing called Operation Choke Point. This is the name of a regulatory crackdown that happened under the Biden administration in the US. So what they would do is they would target companies that deal in crypto, the companies that are even banks that are facilitating crypto companies and letting crypto projects keep store their money in this kind of banks. Like there was the Silicon Valley Bank, Silvergate Bank, and all of these banks essentially got shut down because the government had an agenda to stop or hinder any kind of crypto related innovation. And even to the extent, like if you are the founder of a crypto company and you wanted to buy a house, the bank wouldn't approve you for a mortgage because you worked in a questionable industry. And so that was basically the why crypto people named this a deliberate attempt to kill crypto. We called it like the Operation Choke Point. So even in a regulatory environment like that, where this kind of attacks are going on against people, against the crypto industry, as a company you are not very confident to launch or to invest billions of dollars in this industry.
And
So
and passing the Genius Act allows them to be much more confident that okay, the government is
yeah.
not coming.
Yeah, exactly. The government is not coming. Trump has been very pro crypto. Actually, there's this interesting data that came out that in the last 1 year, Trump's family has made like $55 million of profit from crypto.
I
So
think I was seeing that his son Barron Trump,
yeah,
even he did something. He made a lot of money on crypto.
yeah. So his son Barron Trump, Eric Trump, Donald Trump Jr., all of these people are deeply involved in crypto. They have this company called the World Liberty Finance, and they launched their own stable coins. So like obviously they are in the business, they are making money, and I have no issues with it because like them coming in also assures some sort of regulatory uh, approval. And that's exactly what happened. Like the Senate passed the Genius Act. Now we are waiting for the House to pass it, and once that is done, it becomes the law. And stablecoin from $250 billion some market size, we are looking at anywhere from like 2.5 trillion, even higher than that, in the next 5 years. So yeah, extremely exciting development that are happening. Let me just actually give you a couple of breakdowns on why, like, what are the specific points that the Genius Act is covering, and what are the requirements and restrictions that Genius is putting on the stablecoin issuers. The so I have like I've written this article breaking down the Genius Act, and the six key provisions that I covered in that article is: number one is one-to-one reserve. Like in the last episode we covered, like for every dollar of stablecoin that you issue, you need to have like that same dollar
$1.
reserve. So basically, you need to have like one-to-one reserve. If you're like USDT, if you're USDC, you need to have it. Now that reserve comprises of, obviously you can have physical cash in it, and then you have to have treasury bills maturing in 93 days or less, and you can also have like a Fed RRP, a reverse repurchase agreements to basically a size a chunk of it. So that's basically what your asset, your reserve asset class looks like. You cannot have any stocks, any equities, any precious metals like gold or anything like that. You need to have either cash, either or treasury, or repo agreements. That's pretty much it. So the goal has always been to keep the risk on these this reserve assets as low as possible and basically as liquid as possible. So whenever you need to sell it en masse, you can directly sell it, and there will always be enough liquidity that someone else is willing to buy it at that rate. So yeah, that's the first part, the one-on-one reserves. The second one is a retail yield ban. And what I mean by an yield ban is basically you cannot make money, like you cannot have any, you cannot earn any yield or any interest just by holding the stable coin as a retail user. Because we want they're trying to make a stable coin pretty much the same thing as money, and when you hold cash, you don't get any returns on it, like you don't get any interest on it. When you deposit it in banks, you do get it, but that doesn't inherently doesn't come from the cash itself, but the bank is giving an interest for depositing that money to them, right? So a lot of people in crypto do not like this. They want the stable coins to be yield bearing, but I actually personally I don't have any issues with it, because there are other instruments where you can make like similar amount of yields. There is this thing called like a tokenized money market fund that we can get into in a later episode, that it's basically works very similar to a stable coin, but it's not a currency, it's just basically it's an asset. So if you want yields, you just hold tokenized money market funds. So nobody's going to say anything to you, right? So yeah, so as a retail holder of stable coins, you cannot earn any yields. That's point number 2. Number 3 is think of this like this. What happens if the stablecoin company goes bankrupt for whatever reason? Like there was a massive run, everyone started selling their the USDC, USDT, or anything else because of something or the other. Like there were some issues with the company turned out to be fraud, etc., 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 or simply they've lost all of their competitive advantages. So what happens is the company declares bankruptcy. So who gets the money first? The US government assures that the holders of the stable coins gets the money first. So let's say you hold 1,000 USDC.
The US government ensures now, or it will after the Genius Act's passed?
It's not insured because it's one to one backed. So you don't need an insurance. The company's reserve is insured by itself. It insures your holdings, right? So basically, you have $100 or $1,000 USDC. The company goes bankrupt. The government will make the company pay you first, pay the holders first, and only then they get to pay out to basically other debtors, other investors, or whoever the company owes money to. So basically, it's an FDIC style receivership, where while this is not an insurance, like if a bank goes bankrupt, you get an insurance of up to whatever amount that your country allows insurance amount up to. And next, in number 4, we have a foreign issuer firewall. That means if you are a foreign issuer, you have to abide by the points that the Genius Act outlines. If you do not, then you cannot issue a stable coin within US jurisdictions. So a few things. First of all, you need to have a reserve that consists of these US Treasuries and US repo agreements and basically everything on the reserve side of things. And also they want to inspect your reserve assets at any time of the day they want to. So basically you have to be completely transparent to the government surveys and inspections, and you have to abide by it completely.
So there is also a chance that once the Genius Acts gets passed, other countries will also see and can maybe try to come up with their own acts, right?
Yes, exactly. And and that brings mass adoption, right?
Right.
Yeah. And let's say if you decide not to abide by any of these rules, then you have to make sure that you are IP blocking US investors. Like US investors cannot access your website, cannot open accounts with you, because if they do, then the US government is going to come after you. So for example, USDC, they are pretty much as compliant as possible with the Genius Act. Like now they will be fully compliant, but even before the Genius Act, they were very, very compliant. Whereas USDT is not. USDT in their reserve assets have gold, they have Bitcoin, they have treasuries from other countries. Now that isn't going to fly under the Genius Act. So what USDT is considering doing right now is issuing an US only version of USDT. So like there will be a second USDT that only users from the United States gets to hold, and that US only version will be abiding by all of the requirements of the Genius Act.
So that will get the government's insurance that if something messes up, the government will pay. Like they sure have that.
No, the government isn't paying actually. The government is liquidating your reserve asset to pay the holders of USDT. So like for like as I'm saying, like if you issue $100 worth of stable coins, the reserve assets have to be $100 that you have in your reserve. So what that means is if your company goes bankrupt, the reserve asset is still there and it is still worth $100. So what the government does is they sells the reserve asset and pays back to the holders of USDT. So it's not insured by the government. You are insured. The company insures itself essentially. So that's pretty much it. Like there are like I think 56 billion dollars worth, no, $60 billion worth of USDC is currently circulating in the market. And for that they have like 60.9 or $61 billion worth of reserve assets. That reserve assets, they have value regardless of whether there is a stable coin or not. So you just basically as the government or as an intermediary in the bankruptcy process, you just walk in there, you sell, you take control of the reserve asset that they have, you sell it, you pay to the holders first, and then you pay out to any other debtors that the company have. All right. Yeah, so then we discussed the foreign issuer firewall thing. A couple more points is one is the freeze and seize mandate, whereas you essentially come under the jurisdiction of the United States. So if the United States say that a criminal is using your stable coins and you need to freeze that account, they come with proper accounts, you have to abide, which USDC already does. And so you basically any business entity that is doing business has to abide by US laws. So that this is a no-brainer. And the other one is it's actually basically a dual regulatory model where two different branches of the judiciary, law enforcement handles different things. One is the Fed and another one is the OCC, which is pretty relevant to this discussion. We don't want to go that deep into like there's a boring lawyer stuff. So that's basically the 6 points that the Genius Act is all about. These six primary points.